learned on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming into February 20th, 2020. And I actually want to talk about a big earnings play we made. The NVDAs kept going, and here you see it. Every $40 turned into $1,100, $160 total into $4,600. So I want to go over this play, how we did it. I gave you a breakdown last week, but now you guys get to see even more of how this played out. This is a perfect example on many levels. So I want to go over this trade a little bit more in depth with not only why we played it, but now how we went about playing it and the strategy to be able to ride a play like this to such a high gain, 2,700%. And also our rollover plays hit. But then that being said, I want to try this with another play. So I have another play to watch this week. It has earnings next week. So maybe we could follow along and try to do something similar. But I will say be cautious. I am going to use a smaller amount. A lot of people cashed out on this play. And that was the main lesson today, is that you have to be cautious with this money now. It's a lot of money. You got paid. And if you missed it, don't worry, baby. There's another opportunity. But even if you did hit it now, you have to remember to keep this. Try to keep this money in your account for at least 2 weeks to the next month. Don't go about blowing it away. So even though we could play this on something else, we have to be cautious with the balances and how we go about that. So I have that play for you guys, some keys regarding that. Basic stuff on the market that we need to talk about today. There wasn't too much except for some of the stuff we've been looking at this week and kind of how to play it out. But we got a few earnings today. There's going to be more earnings next week. Confirmed. That will be your biggest earnings week. So I hope you're ready for that. But let us get into it. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. The best part about all of this, even if you watch the watch list, I've talked about all these plays, but you got to watch this live and be a part of this and get the learning lesson live, baby. So hopefully you did that. Hopefully, too, you understand. Option trading, extremely risky. Can't lose all the most financial vessel. Please use all financial advice, educational purpose only. Thank you. But you got to see it live, man. So hopefully we see you there. Come ask questions. All we ask is that you are positive and respectful. Only requirement. We also got some rules that you can read, but hopefully we see you there. And shout out to all the people who are there and been a part of all of it. I love you all. I appreciate you all. Thank you so much, even for watching this video. The code loves you, baby. I mean, you guys are great.
I'm gonna get soft right now.
Oh, yeah, pony! Hey, be quiet. You need to shut up. Get back to the watch list. Come on. You guys are aggressive. Argentina Boomba Boomba, #1 song on iTunes. It's high on the charts. Okay, I don't know what that was, but don't forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes? Let me know about your progress on these NVIDIAs. How did you go about it? And yes, all that. So let us get into it. Here are the keys. I want to get straight into this play and talk about it because this was beautiful. And I will even say none of these titles are clickbait. I know we are coming around here. You guys are seeing this a lot. This is earnings. This is our 5th week in a row of 1,000% plays. This happens a lot during earnings, but this is the power of options. And this is what happens with kind of the strategy that I use. I use small investments. I'm going for low risk, out of the money plays. It's not going to happen all the time, but when we do lose, it's kind of like the Big Short. We lose a little bit, but if we win, we make a lot. So these are real examples. These are real life trades. This is literally what's happened. You're seeing this play. It's a 2,700% play, and there was multiple other 1,000%. So this is the power of options. You could do a lot. It doesn't take a lot of money to make a big move. And that being said, you guys are seeing these opportunities. It means not to gamble these. I recommend you paper trade. There's a lot you could do. It's easy to lose money in options as well too, but these are real plays. This is actually what's happening. It's not like this is something, really crazy, but you have to understand in lines of the situations that it works. But that being said, now this play was important. If you guys remember a few days ago on one of the watch lists, I gave you the breakdown, what we did with this play. I had 7 of these, so I even sold out 3 of them this morning, and I collected about $1,800. I sold them at like $580 a piece. So we got a decent amount of money back. And now I'm holding these, and these still have a carrying value of $4,400. So that we would actually made even double that this morning if I held the other position. But I explained how we did this play, and the key that you guys, this is what I'm saying, this is why I really want to make a point of this whole play. This play was beautiful on many levels, and this isn't, I'm not tooting my own horn or anything. Don't even think that again. The point is, though, there's a lot of learning lessons from the very get-go. How did we play this? It was the earnings run-up. So we knew a company was going to report. We knew the contract contracts, and the stocks usually make a move before then. So we got into earnings, and it was far out the money, but we got a little bit of extra time. This wasn't a weekly. So remember what we did. I put about like $1,000 into the option. I bought 50 of these contracts at 40 cents. So excuse me, I put $2,000. And then what happened? I think I got 30 of them. I'll have to double check. But point was, this is part of the strategy with the earnings flip. I put a lot of money into the play, and it started running up into the earnings. So we made that play on January, I want to say 23rd or February 3rd, or like January 28th or 29th. So a few weeks ago. And this was anticipating earnings. So again, we bought it around here. It started coming into earnings. We bought a few other plays. But the idea of what we were trying to do was flip this into earnings. So now you guys saw that play. I made this play essentially risk-free, meaning when I had that $2,000 position, it went up so much in value that day, I was able to sell out and keep $400 or $300 of these contracts for free. I got 7 of them for $40, $280. But they were up more than that, and we got to hold that for free because we got our initial investment back. So that's the first big key to take away from this. And then also the reason why we played it, earnings IV run-up. So now the next play I'm going to show you that I made today, and then I'm going to be watching throughout this week to try to, again, I don't know if I'm going to hit it. I'm not going to do it the same way with the big play. I might, but I'm more worried about that option chain and the stock's more volatile. But it's the same logic here. We know the earnings are coming up. We know there's going to be an IV run-up. That's what we're looking for. The next thing to pay attention to is the risk management of how we manage the play. So one, we made the play free. I put in $2,000. The minute it went up 30-40%, I sold out my initial investment, and then I said if I want to play and hold into earnings and play some of that earnings potential, I got all my money back, and I made sure I had zero additional new capital risked on the table. That was the first part, but then we had the other play. So remember, I got these 320s, but then I had a 305 and then a 300 that expired on February 28th or February 21st. So what did I do with those plays? I ghetto spreaded the first one, and I got paid. I paid for that play. I paid $300, and then I ended up selling premium on it and collecting $400. So I got paid $100, had a 5,000 max reward, and I would have hit that, but I didn't keep that play. And then I had another 300 contract that didn't expire. And why is that? Because now coming into earnings, you guys see NVIDIA, it started shooting up a lot into earnings. So the plays we made pre-earnings, those went up a lot in value. So again, back to risk management, balancing the books, I still took profits. I sold the ghetto spread. That was pretty much, I collected $70. I had 700 profit. I sold that, and then I sold another $300 contract. I collected $1,000 more profit. So now before earnings, I made a $300 play that we have pretty much $300 of free profit that we're holding into the March 20s. And then the day before earnings, I sold out of the contracts on February 21st, and I collected $1,000 net profit. So now coming into earnings there, risk management, I was already up $1,000. I didn't risk any additional capital. All I was doing was holding the play that we had, these original March 320. So understand the logic here. I gave myself an opportunity to cash out, get a profit up front, and then still remain in the play to catch the earnings, because we know what could happen with earnings if you do get a surprise. So the whole idea was I got to make it free and keep it on the table. Now, the next level here is very important. You can make just as much money after the earnings report. So yes, we had a great play. This play that did the big run up, this was awesome, and it's still 2,700%. But guess what? Even if you were late and you didn't get in there, this is something I've been talking about yesterday, and we made another play on it yesterday, and I brought this up on Friday as well too. This was going after the continuations, and this is what I mean by after earnings. Pretty much a company will report, it'll make the move, but then as the market digests it, as the market reacts, upgrades and downgrades, there's a continuing move in the market, pretty much trades accordingly. So this was that continuations of earnings, and you guys see it jumped up another $30, which is great. But what happened, remember on Friday, we got these rollovers, and I sold out of these this morning, but these were the rollovers we bought on Friday. I showed you guys this one yesterday. Remember, we bought them at 40 cents on Friday. We bought one at $80. Then we bought one at 40. We got a different average. It shot up yesterday. They dropped and they closed there. But now what happened today? They closed up 1,100%. So these were the rollovers we bought after earnings. I had 2 of them, but I sold out of them this morning because again, I said this yesterday, I'm scared of the ones with the little amount of time, because the minute this thing drops down, they're going to lose a lot of value. So I sold out of those 315s this morning at like 170 a pop, or like 150. Oh no, I just looked at the stream and I got 139 for them. So I could have made a lot more, but I sold 2 of them at 139. There's like a 400% profit. So I still got another, $200 something out of that. But we made this play after. That was the continuation. And then the next play, I made this play yesterday. We put it on, you saw it on stream, and we talked about this on the watch list. Remember, I got the 320 for February 28th, and we sold the 330, but that was a debit spread. And I bought that debit spread for $3 or for $34. And now today it closed at $268. So it's about a 700% gain. So it goes up $40 more. We're sitting at 1,000%. And again, I made that play just yesterday. That wasn't, the 2,700 play. 2,700% play, we bought that, weeks ago, but that still didn't change the profiting opportunity. So again, now to the main keys, you could make just as much after the earnings report. Focus on these continuations. That's a whole source of plays a lot of people miss out on, but you're also seeing I positioned myself for both of them. I got both the earnings. I took profits before the earnings, paid myself, risk-free position that was still had enough time, and it was still a big enough value to do damage and get me a nice profit. But then also on the day of the earnings, after it reported, I started setting up continuations the day of earnings or the day after, and then the next following day when we had an opportunity to average down, we did the exact same thing. So there's that. And then also now, even this morning, this is what I ended up doing with this play. I sold 2 of them in this morning or 3 of them at 580. So you guys see I got that $1,740 net off of that. But then I also sold those 315s. And now think about it, because this morning I said I wanted 1,000% out of these. So they opened up, though. They closed at $3. They opened up and they started just really, they hit 2,000% quick. I said, I'm going to take some of that profit, but I sold half of them. So this is the next play of what I did. Along the way, I sold 3 of these, got $1,700, and then I cut out of the other profits on the February 24th. We got that extra $200. But then as the contracts really started to go up, and I sold these still early, I ghetto spreaded it. So I turned those 320s for March. I shorted the 330 contracts. So now I'm still in the play, but I sold these for $2,000 credit. So essentially, if these expire worthless, I'll lose the money on the ones I'm holding, but I'll get another $2,000 profit. We already took out $1,700, so I've already cashed out now $3,700 net plus the $1,000 before. Then we got that $200 extra bucks there. We're almost at $5,000 profit in just cash realized, because again, I got the credit on this, and this one still leaves me now with 4 contracts, $10 difference. I still have a $4,000 potential gain on the upside. That's why I'm still now in the play, but I've gone and taken profits, and that's something to learn here. Do you see how, again, all the while by getting plays and taking profits, and now I even have that other $1,000 max gain $30 debit spread, I'm getting new plays, but I'm trying to get them at better prices. But then when the prices go up, I've been taking profits along the way. So it's not only that I had to, time it perfectly. All the while, there's some I could have made more money on. I left some on the table, but all the while I've been taking profits, and now I'm putting myself in plays and that will help me maximize the position by either getting my initial investment back, selling half of the position, and then ghetto spreading the rest. You guys see how I did that in the process, because as the prices kept going up, every single corner I was able to take advantage of it. The first time the price increase went up, what did we do? We sold, got our initial investment back. Next time it starts to run up and go crazy, it's hitting 1,000, 2,000%. I sold half the position, got a big percentage return, netted that profit. Then it keeps going up. What did I do next? I ghetto spreaded it, left me some upside, got some more cash up front. So all the while, those are the different tools you could use to take profits along the way. But now every single one of those kept my hand in the cookie jar, allowing me to play. So that's the whole point with all this. It's a win-win scenario all around, and hopefully you guys got to learn from this, and you guys have got to see the process from beginning to end. You guys got to see from me buying the play, it going down, us averaging down on it, then it does the pre-earnings shoot up, then we got the play for free, then you saw the earnings move, the contracts didn't go up, we still took profits before that, we held through, we averaged down, we played the continuation, then you saw what happened. So there was a lot to learn from this, so I hope you guys got to take something out for it. Shout out to all the people who profited, and if you didn't, your next one is coming, baby. So I hope you're ready, but let us get into the plays. That was the most important part of everything here, but now let's move on to the next part. This is the next play I'm looking for. It's going to be beyond me. So this is one I'm worried about because I don't know. I want to do the big position flip, but I'm scared of that because Beyond's option chain is a little bit more volatile and we're a lot further out the money. So even though, I wasn't able to get as much time, we did get a February 28th and a March 6th, but Beyond's chain, you're talking like 100% out the money to get a cheap play. The part with NVIDIA, that 320 was 2 standard deviation. So that literally, instead of a 30% probability on a normal contract, it was 15% on Beyond's. We're going to be forced to go real far out the money, which is a little bit more difficult. So I don't know how that's, I want to be more cautious. And that is the main lesson I said. You guys better keep your money from any of these plays. Again, we are hit 5 weeks in a row. Some may not have been as, nice and beautiful, but after Intel, then this and some of the other plays, like you're in the clear right now. So you got to make sure you keep the money. That's it. Just keep the money. Don't give it back. So the best way to give it back is to go big on the next earnings play and parlay it. We're going to kind of slow down on the parlays here until, unless it really makes sense. So I want to try a little bit on Beyond, and I set that play up today. So how I set that up, I set it up in 2 fashions. One, I got a shorter term option, and the idea was it still covers earnings, but their earnings is February 27th. So the shorter play, it only covers it 1 day past earnings. That's not good. So then the next play I made was a March 6th. But for the February 28th, we got a 210 call. And again, this is just super far out the money, 100% increase, volatility's high. But we bought one of these at 54 cents. And that's one I'm hoping that, again, let's say it has the earnings run up, I'll be able to flip this into earnings, take profit, and then I could hold the March 6th one. So I spent $50 on that one, and then we got the March 6th debit spread, and you could even get March 20th, I believe. Someone called this out. You could get the March 20th for even a better price, but I grabbed the March 6th 170, 175 debit spread. So you buy the 170, sell the 175, and I paid 40 cents. It's now trading at it says 29 to 46, so it's kind of the same price depending on what you get filled at. But that's the second play, and pretty much I need to decide now coming into the earnings. Again, tomorrow and Friday will be interesting, but it might make its run up towards next week as the earnings is going to come around Thursday. So we got to give it time, but now I'm already positioned to play the pre-earnings run-up. We may not have as big of a position. The idea would be sell the shorter term coming into the earnings and then ride out the 170, 175. So I'm going to start finding a way to position myself. I'm content with the position I have. It's about $80 to play it so far, and that's only on the call side. I don't know about the put side, but I'm keeping this in mind to control the balance, and then after they report, I could just go play the continuation. So that's going to be the plan. This is the one I'm going to be watching for, and I like this. And then as far as even the other ones today, we did make a McDonald's credit spread. Did this again, and I said this yesterday. I wanted to make it at the beginning of the week. We sold the 220 put, bought the 217.50 put. We pretty much need them to go above 217.90 or 80 is our break even, but I sold it now. I got $2.10 credit. So again, kind of been trying to do these once every week, playing them as a rotation again, where McDonald's, sometimes market goes up, McDonald's comes down, but if the market went down, they would go up. And then sometimes too, if the market went up, the McDonald's could get bullish with everything else and go there. But I like where McDonald's and Home Depot are at. I'm waiting for them to break out, but that's a $50 or $40 risk to make 200. And that's pretty much it. We'll be watching Beyond. I'm also going to keep my eye on Redfin. They went up a little bit. We saw the report from, but we're still holding that May. I like where they're at. Besides that, I'm going to be watching McDonald's. Watch Expedia. They came up a little bit, or we're only up $200 on those contracts. They were up a lot more. They dropped a lot today, but still waiting for their continuation in general, but keep an eye on there. But then another one that caught my eye today was Now. Remember, we have that old play, and remember, I even said this with Now. That's why I got so much time after the earnings. They're worth like $200 now. They're about like $5 out the money, so they expire this week. That's kind of my gamble YOLO play. But if you do have them, I mean, keep an eye on that. It's $150, $200. It's good profit. And then TLT, they stayed up today. They barely closed down, even though dropping a lot in the morning. But with the market going up as much as it did, that is going to be interesting, and that's probably one of the main keys to watch. So keep your eyes out for them. As far as everything else, there was earnings, there was Stamp, but Now they had a big run up, but we didn't play this. We've played them in the past. You would think 40% is big, but this is something you got to watch out for earnings. This is why earnings pricing is so important, because you can see even in the money here, these contracts sold today for $80, $85 just to get $1 in the money, and they expire tomorrow. So you're seeing that the contract chain, the option chain here wasn't really favorable. Maybe, these 135s for like 40 cents could have been in there, but you even go back and get some time. Everything was relatively expensive. So again, you could have played it, but Stamps is a big mover. A lot of people expected it to move. That's why the contracts didn't go too crazy or go up as much as we would have expected. But I'm going to watch that now tomorrow for a continuation play. So watch them, watch Tesla. They shot up again. I know the options went crazy again today. This is, again, another breakout level. It could get a really, really crazy year. I wanted to find a play. I wanted to look for a spread, but I just still don't have the balls to do it. I just don't know what price to put it at. But I'm going to keep watching it. I think it could be fun. Then CrowdStrike, not CrowdStrike. What am I saying? I meant Zoom. Yes, this is the one. This one, people have been talking about it. I didn't really realize it, but I should have. This is an important level for them. Again, it's one of those IPOs, but if you guys remember, last year we played this shit a lot, and it did the same thing when it popped up here, and it was at these 96 to 100 levels. Anything above this level is important. So if they go past here, Zoom could be a breakout one. The only thing I don't like about it is we're late to the party, and the contracts are expensive, so I might either need to find something cheap we could get into, or I'm going to have to kind of let them do its thing, but I like them a lot. Then watch Abivai, healthcare in general. They kind of came up. I like Abivai on the daily now. It's starting to kind of base out, and this is what we want, especially at these levels. Remember, 94, 95 is a big support level on the yearly. But watch UNH. UNH crept up again. Now it's at 305. It's slowly getting past that 300 mark. The contracts are still a little expensive, but I like UNH. So if UNH slows down and those contracts depreciate, that could even be maybe a good YOLO for Friday. Watch HD. Same situation as McDonald's, and it's still kind of holding up. So I like that, but still keeping my eye out for there. I do want even consider a credit spread there, and that's pretty much it for there. And then lastly, watch Verizon. They ran up, but in the name of AT&T and some of those long terms, I kind of like them. I'm interested with what they did. I want to watch them, but watch the banks now. So we had the Fed minutes today. Some of that stuff was important, but I feel like after the Fed meeting and everything else, we're going to start seeing interesting stuff with the banks here and kind of how they respond. But here's the key: banks are lagging. So compare this to like the S&P, kind of like what I showed you guys with everything. The banks aren't past their 29, their December highs, whereas the market has really, really ripped. There's a big divergence here. So you really, I don't know if you could see it as much because it looks like they're already up here and it looks like the banks, outpace the market. But in general now, the market was at 319, 320 when the banks were here, but the banks haven't got past this price, but now the market's gone up a lot. So surprisingly, the banks are lagging, and that could present an opportunity. So if things start to turn up or we start to see positivity in tech kind of go down, I wouldn't be surprised to watch a rotation in the bank. So keep your eyes out for that. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Make sure you have your intentions to protect and keep the money, baby. Keep that helmet on. That helmet is your mindset, is how you look at things. You don't have time to doubt yourself. I don't care if you miss the play. You're going to get another one. I don't care if you hit the play. You ain't rich, bro. You got to protect the money and save it. You got the play. Oh, it's not enough. It's enough. You're just telling yourself it's not enough. You got to control the helmet in the head, baby. I need y'all ready to go. I need y'all ready to embrace all the opportunities. You need to call them out. You will embrace opportunities. You don't have time to say, oh, this one's not for me. This is it. I suck. I quit. It never happens for me. No, baby. You just get ready to receive it. If you keep your eyes open, expecting everything's going to look like an opportunity, call it out, baby. Don't worry. We just got to protect ourselves, balance the books, protect the budget, and understand the process, baby. Put yourself in win-win positions. Play smart. Be okay with letting some of them lose, man. It's okay. You're going to lose some. You're going to take profits too early. That's okay. We move on to the next one, baby. It's the Colt. It's game time. Let's go.